Hello traders, you're welcome to this video on the breakaway gap trading strategy. Gaps in the market often confuse traders, right? But they actually provide, you know, powerful insights when understood correctly. A breakaway gap in particular is one of the strongest signals of a new trend forming, okay? And in this video, we are going to break down exactly how to identify and trade it. All right. So first of all, what is a breakaway gap? A breakaway gap occurs when the price breaks out of a period of consolidation or a well-defined support or resistance level with a significant price jump. All right, so we're just going to quickly look for an example right now, you know, example of a breakaway gap so that we can understand the concept properly. All right. So we can see now in this particular example, we had a period of consolidation around here, right? Yeah, this was a consolidation. And if you see, there was a gap after the breakout occurred. The breakout from this consolidation occurred, and we had a jump. See how price jumped all the way up here, right? This was the open price. Remember, this is a bearish candle, right? And this was where this candle closed. So price jumped all the way from here up to this place before it now started coming down. Okay, so a breakaway gap occurs when price breaks out of a period of consolidation or a well-defined support or resistance level with a significant price jump, leaving, an empty space or gap on the chart. All right, so this gap reflects a sudden and decisive shift in market sentiment where buyers or sellers strongly take control. Okay, so unlike other gaps, such as common gaps that usually fill quickly, breakaway gaps signal the start of a new trend and often remain unfilled for an extended period. Now, let us talk about the core elements of the breakaway gap trading strategy. The first element is identification. Okay, you want to see a clear consolidation zone, or a range where price has been stuck. Then, the gap forms when price breaks away sharply from that range, all right, leaving a noticeable space on the chart. The second element is volume, right? A genuine breakaway gap is often accompanied by strong trading volume. This shows conviction behind the move and confirms that institutions and big players are driving the breakout. So, for that purpose, you can actually take advantage of the volumes indicator, just want to see how price, reacts and how volume reacts. I mean, how volume reacts around that breakout zone, right? So, without volume, a gap may not hold and the move can fade quickly. Now, the third element is classification. All right, it's important to distinguish a breakaway gap from other types of gaps. For example, exhaustion gaps happen near the end of a trend. Okay, while runaway gaps appear in the middle of strong moves. A breakaway gap happens at the start of a trend and usually marks a major shift in market direction. All right, so in as much as this might not be a perfect example, I just needed to find a gap to explain the concept for you properly. All right, so here are some important tips for applying the breakaway gap trading strategy. First of all, you have to focus on the higher time frames, right? Such as the 1 hour or 4 hours or even the daily chart, because this provides cleaner signals and stronger gaps. Secondly, you have to be patient. Why? Because not every gap is a breakaway gap, right? So you have to wait for confirmation before entering. Third, you have to maintain discipline. Just because a gap forms does not mean, that you jump in blindly. All right. So you should always confirm with structure and momentum. So by now, you should have a clear understanding of what a breakaway gap is, right? How it forms and how to trade it effectively. You've learned the importance of volume, consolidation, zones, and confirmation, right? As well as the steps to enter and manage trades using this approach. So if you found this breakdown of the breakaway gap trading strategy helpful, make sure to hit the like button and subscribe to the channel so you do not miss more trading strategies and tutorials. Also, share this with other traders who want to understand gaps and market structure better. Also, do not forget about risk management, okay? When you want to trade gaps, whether you are trading it with the idea of gaps being filled or whatever idea that you have in mind, make sure that you always apply proper risk management. Do not trade with an amount you cannot afford to lose. Do not risk a, a huge percentage of your account balance per trade. You might want to stick to 1 to 2% per trade, right? Just to ensure that your risks are kept in check. Okay, it's better to have multiple trades with peace of mind than to have few instantaneous trades that could flip your account or blow your account without your peace of mind, right? So if you're an aggressive trader, you can still trade aggressively with wisdom. But if you are a conservative trader, which is the best, just stick with risking a few percentage of your account per trade. All right. So in the meantime, thank you for watching, and I look forward to seeing you in the next video. Make sure to trade smart, to stay patient, and to remain profitable.